Good morning, officially. Everyone, welcome out to the Market Watch Group. Sunday Market Insights. I'm trying to break this day up into two components. Part one is like the deep dive into the market. So if you're a beginner and you're like, am I going to be a little lost? Probably, I think, a little. As you're like, wait, what? What does that mean? But just remember that there are 6 videos, one for each component, that you can go back and watch over and over, that just kind of talks about the internal workings of our market posture scoring. And I think just seeing it over and over again can be beneficial. But as a beginner, the most important thing when we're done today is the implications, which is what I'm trying to do in the second half. The implications is, now what? Now, what does that mean if my posture is a 1, 2, 4, 8? Never seen 8. Not here. I saw 8 early on in my trading when I did this, when I scored it too aggressively. I'm like, yeah, that was... But the bottom line is, how are we taking this score, and not just this score, but the progression of the score, right? Meaning, are we down and then down and then down and then down, and we're like, whoa, this thing is in a free fall, or are we dropped and then we're trying to stabilize and we're in a period of stability? That's kind of where I see us now. So the context definitely matters. All right, let's dive in. As always, remember, this is for education, illustrative purposes only. No recommendations to buy or sell any security or financial product. We're not brokers. We're not advisors. We don't give recommendations or advice. What are we going to do? We're going to posture. We're going to look a little bit at the economic calendar, the week ahead. We just got through the first week of the year, which is the first week of the month, rather. That always is going to have employment data. We'll talk a little bit about how that came and what's coming out this week. One hard thing right now, when you think about why are we looking at the economic calendar, because we're like, well, what's going to influence the market? When we think about that and what has been, which has been Fed, it's been inflation data, jobs reports to some extent. Now it's a little bit, we would never call it predictive, but it's a little bit more random now, meaning it's not even coming out at those times, because a lot of it is based on this trade, this tariff scenario that's playing out, and how long the uncertainty there is going to continue. Sectors. Market posture does not care about seasonalities. That was my finding, which I love, that in your individual pursuit of a historical analysis, you found that, because that's the objective, clearly, right? We want it not to care about our opinion, right? It shouldn't care about our opinion. It shouldn't care about seasonalities. It shouldn't care. It should only care about the fundamental characteristics that motivate each of those criteria that we bring together to create it. So that's awesome. That's the one of the final results. Press, good to see you. Happy Sunday to you. Okay. If, as you're going through the watch list, if you're thinking to yourself, I tossed it out the other day, then I'm trying to remember, I think it's consumer discretionary. At the end of today, we're going to vote on what we think is an underrepresented sector in our watch list based on what we see in the sector rotation analysis, and then as we're scrolling through what we have. Because right now, even as we speak, we had the drop, and now it's starting to stabilize potentially. Potentially. You might have bought puts at the end of the day on Friday, so we're going to talk a little bit about that. We'll get to the opportunity list. We'll get to the trading plan section of the week. So let's go dive in. Let's dive in. Is this new? Did I refresh? What do we have going on here? So how did we close on Friday? Down 1% on the S&P, 1 on the Dow, 1 1/3 on the NASDAQ, 1.2 on the Russell. What else do we know? Tariff risk hangs over East Europe's Trump-induced market rally. Hidden AI stocks set to rally amid DeepSeek's breakthrough. I mean, if you see something like that, you can see it's an analyst. It's up to you if you want to. Well, let's just see. Let's just see what they think. The Roundhill Magnificent Seven. Sienna and Coherent, it seems, are the two. ANET, Sienna, Coherent. We already have Celestica. Let's see. Good for us on that front. Oh, shoot. Okay. Yeah, sorry. My Sunday maintenance got me. I thought I had it back up, but it was not quite back up. Okay, so we're going to jump around a little bit. We're going to start here on the Fed Watch. What do we have from the Fed? Real quickly, and then I'm going to take a quick peek at last week's posture to see what we think's going to happen now, and we'll get into it. Here's a question, though. Did anybody buy new puts, whether for a hedge, whether for a speculation, on Friday? We put out an alert, and we put it out as last time on Friday. We put it out as like a hedge alert because I knew there was multiple of us carrying trade. This time it seemed like there was less, so I kind of said, hey, this is a bit more speculative. It was not generated as like a true hedge. It was generated because a true hedge requires a higher low from the VIX, which we did not get. We did not get a true higher low. We got a what looked like a support level test and bouncing. So certainly there was enough signal. Anyway, all right. So let's talk about the Fed while my updates try to install. It seems like it's taking a while. I'm going to give it one time where I close it and start it again. Hold on. Okay. Yeah, no one thinks it's going in March. March is the next one. That's how far away. 38 days. 5 weeks and some is the next Fed meeting with very minimal thoughts of there being any type of expectation for a rate cut. We go to May. Now, lots can change in 5 weeks, Steven said. Steven, I feel like you were want the Fed to wait guy but you've shifted to a want the Fed to cut guy. Am I picking that up right? That you're pushing for a cut at this point? Believe me, I get it. I wanted to possibly look at a rental property for the last 2 years of my daughter's undergraduate time. And thank you, Miguel. Yep, Miguel knows that's what I was talking about. It's trying to pick up a rental property, and I thought maybe if these rates get down to 5, and now they're back up above 7, I'm like, shit. Yeah, I get it. I get that. Okay. May, it picks up a little bit, 24%. I've been sitting around the June area, and I'm starting to like waver and think maybe not June, maybe July. Yeah, buy now, less demand, refi later. It makes sense. The thing for me was I only wanted to do it as if I could cash flow it in a way where, I'm net cash flow neutral after my daughter's payment, so it's based right. And maybe that was just a pie in the sky. Then it would be cash flow positive when she was done. So it'd basically be like nothing for 2 years, but at least I'm not. That was the hope. Anyways, but where does it land? It lands on I will continue to pay like an entire household worth of rent for like this little teeny mini private dorm room. It's insane. Is anyone else's Thinkorswim giving them a problem? Mine just won't like kick in. It's just keep saying installing updates. Let me see if I can get a second instance of it running. TOS is working well. Oh, there we go. Maybe that'll help. Clint said his took a very long time. Okay. We'll see if one of those gets me a... Nope. Huh. All right. Okay, Greg, yours is spinning right now too, huh? Well, that's not going to be helpful, but at least mine's not the only one. Here's June. And you can see June, we're close, but actually at this point, it's still not. Oh, there we go. I got one. Blocked some features. Okay, I thought it was. I was having. Is that new? Someone else got that firewall block from Thinkorswim? Okay, let's get signed in here. Hold on. Now we'll start running. Okay. Oh, I need to get a text message real fast. Let's see. 2-factor authentication. Pretty sure I did this last time and said skip it, but okay. Okay, you got the block as well, Clint. I'm telling you guys, it's nice to be able to just kind of like make sure everyone's getting a similar platform experience. You know what I mean? I have people that I've worked with that drives them crazy when they think it's just them. Never is. It's always them. It's not us. Okay, charts are coming real quickly. June is now. It's about 50-50, but slightly against more than 4, right? Slightly for the hold, more than the 4. So it looks like July is the first time that it really kicks over. I'd probably still put myself in June. That's quite a long time for things. So, yeah. Okay, just interesting to see where the Fed is right now. What expectations are built in? That's my second one. We'll get that ready later. I was looking at the DJ. Anyone trade this ever? The DJT stock? It's an interesting one. All right, let's go to SPY. Let's go to 5 years. Let's go fast. So as I'm going through it, put your score on. Clearly, this is still in the red, right? The red zone. It's not making a fight for blue, so I feel like we have the right score. Yes, and lost, Johnson, right? So I'm staying. I mean, it looks good, which is a strong piece of the current market. Copy. So 1.25 looks good to me. I'm staying there. Let me know if you're a little higher, a little lower, in the same place. Let's jump down to the 6-month daily. 1.25 as well. Okay. I mean, it's a good trend. You can see we've had a nice, strong trend this whole time. What's interesting, Miguel said, he looked at January versus January. You know what? I'm curious. What's the average market posture score for 2024? It was a bull market a good amount of the time. What do you think the average score was? 5.3, 5.41. Look at these guys. Numbers, guys. I love it. That makes sense. Right? I mean, it makes sense. That definitely makes sense. Okay. Very cool. Very cool. The group started right around, I want to say, here. So we were just coming out of bear market 2022 and then sort of transitioning. And so it was, if you had to guess, you would be like, maybe it was a 3 or a so coming out of that. And we kicked into some bullishness here. And then we got into a correction here. And then average score 3.43. So, okay. So this was a 5.41. And this was a 3.4. Both were ultimately bullish years, but one was definitely a better year than the other. I think that makes sense. Missing Jan, Feb, March for 2023. I could probably go find my own individual spreadsheet of like where I was tracking it, because that was it, right? That was the start. This is where we started. I mean, I could come in and tell you, like, it was it was negative here. So in here we transitioned from probably like a -3. I think we were maybe around a 2 or a 3 coming in over here. So that's that transition. You can see what it looks like. That market fighting to try to get better. Super interesting. I'm glad you brought that up. Okay. Onward and upward. I've got to go faster now, like always. What's going to happen this time? Okay. So last week we were down here. We got up. We rolled over. I am currently a 1.25. So we dropped by a half a point, and then we jumped by a half a point. Yeah. Dropped by a half. Jan 5th to Jan 12th. So right through here, we dropped a half. Then right through here, we got it back. And now where are we? I don't see any. I mean, we feels a little sideways to me. I'm actually going to take a quarter of a point away. It was a lower high. We rolled over and did not get back up to the old high. So I am going to take a quarter of a point away. I mean, overall, 1 point may still be where we end up. It could end up in like this type of a trend from right here. Boom, boom. So if it comes down, and that would feel like about a 1 point trend. So yeah, I'm taking a point. Steven said I dropped mine to 1. Okay. Anybody else? Is it a higher low? That's what's hard, right? Is from here to here, yes. But you got this thing just kind of floating in here where, yeah, I don't know. I think a 1 is lower low. Yeah, so this is lower than this. But not by a ton. I don't know. I think minus a quarter of a point is reflective of like what happened. So I'm going to take it to a 1. Oh, now here's where it'll get interesting. Volume. I think the volume's going to stay. It just can't seem to get away from this level. So on Friday, we were like, is it going to be above average volume? Well, above average was 48.43. What microphone is being used? Hold on a second. My inputs. Okay, I think it should be the good microphone. Does it sound good? Does it sound okay? Crisp. Love it. Okay, 48. 48.433. 48.433. We'll just do this. 50,854,000. What did we have? Oh, we had 50,788,000. That's hilarious. So our criteria, Miguel's going to say, Count Miguel, you're going to waver? I'm not going to waver. I went specific. I went to the 10,000 mark, 48,433. 48,433,000 average. 5% means we need 50,854,000. We have 50,788. We're 60,000 short. I'm going to say no. It's under 5%. It does not get the nod. Steven said it's 4.87. It's red. It's a red day for sure. It's a big red day. That's true. This is a good discussion today. Bob Rowland says, round it up to count it. Here's what's already happened. So let's talk about the implications of what that would mean. I've got one red cell back here. Gone. I'm not going to count that. That's one that's like, it drops off as soon as Monday opens, so I'm not going to count that. Then I've got a sell day here, and I've turned this into one sell day. One. Right? Why am I doing that? Well, because it was such a weird, like, start bullish, but then ends down. It wasn't a terrible drop, but we gave that to the sellers. This one, it was a big bear start, and then it ended up here, and so it dropped a little further. And if I were to go from the first day, let me switch my color to have that stand out, to this day, that's not that big of a day, right? We've had way worse than that, up or down, for one day. And so because of the weirdness of those two candles, because of all that, I have decided to merge this into one day. But it's still a sell day, right? So I still have one sell day here. I have one sell day here. And I don't know here. So what's this? What's the implications of this? And then I'm going to take a vote. I'm going to take a vote. And the way we do votes here is first to. And in this case, it's first to 3. So it's not about just voting, but voting fast. You have to be decisive. Fortune favors the bold. What does that mean? It means that once we're done making the case, I'm going to say, do we count it? That means you're going to give it another day, or are you going to say not? Hold firm. Count it or not. First to 3. What is the difference? If we only have 2 sell days to 0, I'm going to actually say that that's a 0.25, and I'm at a 0.5, so that's going to raise my score a little bit. If it's 3, I'm going to say it's 3 to 0. That's still enough that I'm going to give it a minus 0.5. So for me, this determines whether we raise the score or not. Okay. Now, the voting starts. I'm going to type in a message to everyone that says now. That's when the voting begins. So count it or not. Those are your 2 options. Count it or not. Ready? Go. Not. Count it. Oh, look at Bob ready to go. Press says no. The knots are in the lead. I love it. Oh, I thought there'd be not. There it is. Frank P snuck it in. Let me just make sure. Not. Count it. Not. Press says count it. Frank P says not. I love that. That was a great vote. It was a great vote, you guys. The knots have it. So all of that disappears. This does not get counted. Does not get counted, which means this gets marked. It is 2 sellers, 0 buyers, which means my score is going to be a minus 0.25. A minus 0.25. It's only very slightly in favor now. Here's what's interesting, you guys. This is the sanity check, ironically. The sanity check is bullish. Overall, my volume score is a little bit like, oh, be careful. But I am going to raise this to minus 0.25. So I lost a little on the short term, regained it on the volume. Let's go to major market. I'm like, I'm going to speed up. Every time I say that, I go slow. That was a great discussion. Thanks, everyone. It's helpful. It's helpful for us to be like, hey, how important is this? And I think it's nice for us to be realistic with it. Like that was the point. Press said stick to our rules. So we have consistency in scoring. So that when we look back historically like we were doing today, there's merit to that evaluation. I agree with that. 200 days. The NASDAQ's up on the top. as we would expect, there's the S&P, there's the Russell, and the Dow. Now, the problem that we've had with this analysis is as we've started to zoom in, we have seen more defensive-looking characteristics. There's the NASDAQ still on top, but then we're like, wait a second. This little race for third took a very different turn recently. And the Dow has moved into that. And we're saying that if it was down here and these two are just jostling back and forth, we leave it at a 0.5. It's more bullish. But the fact that the Dow is surging while everything else is going sideways, that has us thinking, ooh, wait, what's going on here? Remember that last week we already dropped it a quarter of a point. That's kind of the momentum that we're on. Let's drop down to 66 days. 66. The NASDAQ is still holding on, but there's that Dow moving up. Like, hey, is it feeling defensive? It's not enough that I still have technology in the lead across the board. So I'm still going to see this more positively than not. The 0.25 makes sense, but only a 0.25 to me makes sense. I don't see it bullish enough because I'm like, the only change in what we've seen on this analysis is improvement, or improvement in a way that we're saying the interpretation is not just all boats are rising with the tide, but these boats are a little bit more defensive, and that's how we're seeing this. So it's not terrible, but it has shifted, and so I think we've already reflected that. I'm not changing my score on that one. Let's look at the 22. And that's, back last week when we did this is when we're like, oh, yeah, definitely this feels more defensive. It's not more defensive. It's just it was more defensive then. We're not going to score it even more so now. It's actually just gone sideways and pulled back like everything else. So I think this looks fine. I am going to leave mine at a 0.25. Let's go look at sectors. Now, sector rotation, that's where the strength has been. Consumer discretionary on top. Communication services on top. Financials on top. We did have utilities up in there, but then also technology, also industrials. Then the defensives are way down here. Okay, that sets the tone. This time as we go in, it stays. There's still discretionary, still communication services, still financials, still technology. In fact, technology's moved above. Utilities is still hanging out there. Industrials, that's the big 5 plus utilities. All the defensives are down here. The alignment still looks very much growth oriented. 66, what do we have? Discretionary, financials, communication services, technology, industrials, and then everything else is down there. So nothing's changed here. The sector rotation looks very much oriented towards growth as far as the institutions are concerned. My score will not change. I'm still a 1. Thoughts, comments, questions, concerns? $22. What do we like? What do we not? Financials on top, like that. That's growth oriented. Materials, healthcare. It's a mixed bag on the 22 day. We got a couple of growths: communication services and financials. Then we've got healthcare and basic materials. Industrials not far behind. Discretionaries dipping a little bit. Technology bringing up. I know, healthcare, right? Interesting fact. Back in 2000 and it was after Obamacare passed. I want to say around maybe 2012, 13, maybe even 14, somewhere in that early range of the teens, was a period of 2 years, 2 years, where healthcare, if you looked at the sector rotation, over a broad period of time, healthcare was the strongest. So, like, as you moved into Obamacare, it was, anyway, interesting. Yeah. Okay, let's go look at the VIX. I did speed up a little bit here, right? What does the VIX show? Okay. Where are you, VIX? This is where I still have problems on the VIX. The VIX is a tough one. It's a tough one. And so, most recently, we said this was a higher low right here. And our score. Oh, wait. No, we didn't. Did we not? Here. Why do I feel like I was supposed to have? That's the first question. 131. I felt like last week we did bring that down. Why is my score not reflective of that? Did I not move it like I was supposed to have? Does anyone remember? Feels like this should be a 1 right here. From last week. And then okay, so I feel like that was a higher low. And we put a hedge on. And it went up here. This was definitely a lower high. We scored this a lower high. And this was... But I'm not going to call this a higher low because by the time we closed, it was right here at this same level. And this probably adds to your confusion, Stephen, is body like versus shadow. That shadow technically went higher than that. But the body was down here. The open of this one was here, but the close was here underneath it. There is, as there always is, going to be some measure of discretion. You saw the discretion in volume. I have a feeling a couple of you rounded up and maybe changed your volume. Right? So the way that you make that discretion can have subtle influences. But at the end of the day, we did score this now. I scored this at a 0.25 positive, right? So that one, our score, negative. That one dropped our score. But I don't see anything last week. The higher low and the lower highs, yeah, because they're inverted. It's an inverted analysis. It's definitely harder. Ultimately, what we're hoping to see, let me bring another color back in, is this thing generically and generally moving down? And what's happening down here? You can see to some extent it does look like that type of a descending triangle, where this might come up another lower high. That certainly could be something to look for this week. And this comes down, and ideally we'd eventually break through this to get back to this level sometime soon. But as of right now, nothing for me. I'm going to leave it the same. But the same is a 1, not a 1.25. That's where I am. That's where I am. The short-term score, a little bit of a knock because it couldn't get back to the old highs. Volume got a little bit of an increase. A little bit of an increase because it is so weird. Because of the volume profile shift. Major markets stay the same, still slightly positive. Sector rotation still a very, very strong part of the market. And volatility staying the same. I mean, we are still under 18 right now, so the volatility is a 1 that's a relatively good score actually. That's where I am, 4.25. Where are you? Do you agree? Do you disagree? Let's get to the watch list. Watch list, and so what are the implications of this for anyone who's new? I mean, it feels like it's stabilizing. We hit 4, 4, 5, 5, 4, 2, 5, 4, 2, 5. We're stabilizing. So the hope is that we're at least done with the drop and we're not going to go into a correction. I think if you look, next week is going to be a big part of that. Okay? So there was some hedging going on here on this big engulfing candle, very similar to this one. People who hedged made money on it, even though it came back as quickly as it did. So you can still make money on it. But what's the thought? Well, the thought is down here is a first level. If we test this low, down here is the second level, I believe was 580, right? Does this accelerate? If it accelerates, your hedge will be a phenomenal thing. So if it like pops through here, then you're like, oh man, that's where things could get, looks more like this back here, right? Something like that. If it stalls, if it drops a day and then stalls and then turns, well, that's actually a nice looking, hey, this thing could try to bust out of this. We're still overall bullish. I would definitely look to trade that. So that's how I see it. Is the 425 makes sense? Press is a 425. Stevens a 45. A 4-5 says that if we can stabilize without breaking this low right here, then we should be putting trades on. That's what it means, right? That's what it means. We're bullish enough that we should be looking for that. Powell is testifying the 2 days next week. Lately, when he speaks, it dips. Yeah, there's always the concerns. He's, always concerns because, he's trying to maintain another volatile week. I think it could be choppy, but the chop could be informative chop, right? So right now, I would imagine, if anything, if you have bullish trades on, it's not very many. There's a hedge, there's some balance, and when you look at what we have right here, that makes a lot of sense to me. Okay, let's go through the individual stocks. Let's get through this watch list of ours. Apple. Oh, Apple's looking dicey there. Amazon, earnings were a little bit iffy, but I actually still like Amazon just fine. AppLovin, earnings in the middle of next week. I'm going to say there's nothing there for us. AXP, you might have held yours, you might have shut yours down, you might have shut some down and held some. You can see it. It's like it was trying and it just couldn't do it. But the loss, if you took it, would be very, very minimal. Very minimal. BAC, I like BAC. I think BAC setting up for financials is still a good sector. BX, it's a little bit iffy for that one though. Caterpillar, still a no for me for now. CLS is a definite yes. That one we saw pop up. Oh yeah, we were going to look at Sienna. Okay. Yeah, that's a very similar looking to CLS. I think CLS is cheaper and has better options, but you know what? Let's put that on. CLS has been strong. Let's put Sienna on. Coherent, we have had before. Gosh.
Recording stopped.